Good morning. Before I call this meeting to order, I'll note for the record that I'll serve as the acting chair for today's meeting. I now call to order the meeting of the Bond Financing Committee members of the New York State Urban Development Corporation doing business as Empire State Development, Thursday, February 20th, 2020. I'd like to note for the record this meeting is being webcast. The committee members have received the relevant written materials in advance of today's meeting and are free to ask questions at any time. We welcome public comment on today's agenda to ensure maximum opportunity for participation. Speakers representing themselves may speak for up to 2 minutes, and those representing groups for up to 4 minutes. At this time, I'll ask the committee members whether anyone has a potential conflict of interest with respect to today's agenda item. If so, I'll ask you to please make an appropriate disclosure on the record at this time. Hearing no conflicts, and I ask Douglas Brissett, ESD's treasurer, to present today's agenda item, which relates to the issuance of state sales tax revenue bonds. Doug, take it away.
Thank you very much. Good morning, everyone. Today, the committee is being asked to approve the forms of the supplemental resolution, preliminary official statement, and official statement, notices of sale, and related documents in connection with the proposed sale and delivery of one or more series or subseries of New York State Urban Development Corporation's state sales tax revenue bonds.
Good.
Got to catch my breath after that. The bonds may be issued as a tax-exempt and/or taxable bonds on one or more dates in an aggregate principal amount not to exceed $2.2 billion. As stated in the resolution, the committee, on behalf of the Urban Development Corporation, more simply the corporation, is also being asked to delegate authority to certain officers and employees of the corporation to establish, within certain parameters, final terms of the bond sale and to take all actions deemed necessary to accomplish the final sale and delivery of the bonds. The bonds will be issued by the corporation pursuant to the New York State Tax Revenue Bond Financing Program and will be secured by a pledge of financing agreement payments from amounts legally required to be deposited into the Sales Tax Revenue Bond Tax Fund. The Sales Tax Revenue Bond Tax Fund receives a statutory allocation of New York State sales tax receipts, net of amounts estimated for refunds, in an amount equal to 1 percentage point of taxation. This rate will increase to 2 points once certain obligations of the Local Government Assistance Corporation, or LGAC, are satisfied. The current state sales tax rate is 4%. The documents described herein are substantively identical to those used by any other authorized issuer of New York State sales tax revenue bonds. The Public Authorities Control Board approved the issuance of the bonds at a meeting yesterday, February 19th. Proceeds from the sale of the bonds will be used to finance projects relating to certain state projects and programs, other state-supported activities, and may refund certain outstanding state-supported debt previously issued by the corporation and other authorized issuers of state-supported debt. The bonds will be sold on a competitive basis as fixed-rate tax-exempt and fixed-rate taxable bonds. The tax-exempt and taxable bonds will be offered through a single preliminary official statement, but the two bond series will have separate notices of sale. In accordance with the attached resolution and exhibits, the committee is requested to adopt the New York State Urban Development Corporation State Sales Tax Revenue Bonds Supplemental Resolution 2020-1. Authorize the sale of each series of the bonds on a public competitive basis pursuant to the applicable notices of sale appended to the preliminary official statement. Approve the form and content of the preliminary official statement, the official statement, and various documents connected with the sale and delivery of the bonds. And authorize certain officers and employees of the corporation take all actions deemed necessary to accomplish the final sale and delivery of the bonds. By approving the Financing Committee resolution, the committee will establish $2.2 billion as the maximum aggregate principal of the bonds that may be issued. Establish a maximum true interest cost of 7.5% for the tax-exempt bonds and a 10% for the taxable bonds. Establish the maximum final maturity date of not more than 30 years after the date of issuance. And delegate to certain officers and employees the power to, A, determine the terms of the bonds within the parameters set forth therein, including but not limited to the final aggregate principal amount of the bonds, the principal amount of each series of the bonds, the principal amount of the bonds maturing in each year, the final maturity dates for such bonds, and the interest rates of the bonds. B, award the bonds to one or more successful bidders. And C, make such changes to the related documents deemed as necessary and appropriate. The bonds are expected to price on March 17th and close on March 26th. Thank you very much. I'm happy to answer any questions this time.
Okay. Good presentation. Any questions for Doug on these sales tax bonds? We haven't gotten into negative rate bonds yet, have we, in the U.S.?
We have not, but we are still experiencing, and especially in the muni markets, extraordinarily historically low rates.
Yeah.
Well, I was going to say 7.5 on tax exempt.
That's-
Sign me up for those.
That's
Yeah.
like private
Those-
equity returns.
Exactly.
Those caps are set by the PACB, so
Yeah.
they're part of the,
But these may in fact be 2 or something percent.
they will.
Yeah.
So,
Yeah.
so last look, and again, it's a weighted average of all the series, but we're looking at an all-in true interest cost of somewhere around 270 to 275.
And what duration would that?
And so that's on a 19-year weighted average life.
That's amazing.
Yeah.
And the question, and I've asked this before, is, that allocation between tax exempt and taxable, how that allocation is done just based on sort of the market interest in either one, or
No,
is
no,
it?
no, it's done on what the proceeds are used for, so there's outside tax counsel that's looking at it, so if it qualifies to meet the IRS standards, it becomes tax exempt.
Got it, okay.
And that's what's going on right now.
Got it, okay.
Yeah, so that's done at a very granular
Got
project
it.
by project.
So we don't know what
basis.
the ultimate mix will be in the 2.2?
Not today,
That's
but we
correct.
will soon.
Got it, okay.
Well, it feels like we're doing a lot of bonds, which is great for the agency. It's great for the state. The more bonds, the better. And we do quite a variety between transportation bonds and state bonds.
It's a busy year.
Mhm.
What's that?
It's a busy year.
Yeah, that's fabulous. Way to go.
It's becoming our major revenue area, our finance department.
Exactly. Excellent.
Yeah, and the great thing about the transportation bonds is that's all private investment coming in.
Yeah.
That we're helping get access to the market, so.
You know what's interesting? It's amazing how much money is generated from food service. Airport food service is just incredible. And, you start to think of that as an annuity and, people kind of, advance those funds. It becomes a huge portion of like the CapEx that goes into some of those projects. It's really
Mhm.
quite stunning. It's like sports arenas and things like that. And you think about how much revenue is generated through airport food service operations, and now wherever you sit, you've got like a terminal, and it's become easier and easier to order something while you're sitting there. It's very impressive. Okay, are there any other questions or comments? Any comments from the public on this item? Is there a motion to approve?
Motion.
Thank you. And second, all in favor?
Aye.
Aye. Any opposed? Way to go. I don't think we have any other business. There's a motion to adjourn, perhaps?
Motion to adjourn.
Great. Thank you all. Thank you, team, for doing a great job.